So you're looking to buy your first home, but maybe you're thinking, how much can I actually afford? And this is definitely a good question. So let's just answer it together in this video. Now obviously the payments for average home mortgage are spread for usually about 30 years, but besides the mortgage payments you have to take some other things into consideration, and that's why there is some specific formula you should use to calculate it. So besides the mortgage and property taxes, obviously you will have some repairs, and the average estimated annual repair cost is basically 1% a year of the total home value. So if you buy $500,000 house, that annual cost will be $5,000. Obviously this is just average because some years it might be higher and some lower too. When me and my wife bought our house, for example, 3 months later there was some major water leak connecting to the pipe outside of the house, but it was still our responsibility and we had to pay $4,200, which was really stressful, and that was 17 years ago, and probably right now that would be $6,000 or $7,000. There might be some also landscaping costs, homeowners association costs. So with all that being said, how much house can you really afford? Now there is a basic formula that you can calculate it, and that's pretty safe. And that rule is that your home mortgage, and that's including the property taxes and insurance, shouldn't exceed 28% of your monthly income. So for example, if you're making $72,000 a year, aka $6,000 a month, you can afford the mortgage payment with the property taxes and insurance included in the amount of $1,680. So with that formula, it would only allow you to buy the house with the price range between $250,000 and $260,000. And if you think that's very low, you're actually right. And unfortunately, we can thank the high interest rates for that, which right now are between 6.5% and 7%. And just 2 to 3 years ago, with way lower interest, for that same $680 mortgage payment a month, you could afford a house that was worth more than $400,000. And that's the crazy part. So here is few income examples with the same 28% rule, and of course the 20% down payment for the house and 30 years mortgage. So to afford $400,000 house, you will need to make $112,000 a year. To afford $600,000 house, you will need to make $167 a year. And if you want something from the higher shelf, let's say $1 million house, then your annual income should be about $280,000. Now to be extra safe and secured, you can go with 25%. However, no matter what you do not exceed 33% of your monthly income, because then you're putting yourself at very high risk of actually struggling to make the mortgage payment every single month. So this is what you can safely afford. However, the lenders use totally different formula. So when you're trying to apply for the home loan, lenders will need these two things for consideration. The first one is your income and then your debt. So if the income is very straightforward, obviously they will want to know how much you make every month, and also if you have steady employment. Plus they might require 2 years of taxes, and if you meet this criteria, then that part is pretty much done. However, with the debt, well, that's slightly more complicated. You see, when it comes to your debt, the lenders usually look at what's called debt to income ratio, and most lenders want that number to be below 45%. So to calculate it, you take your monthly income, let's say $7,000, and you make it times 0.045%. So in this case, that would be $3,150. But let's say you also have $600 payment for the car, plus $300 for the credit cards. So in this case, since the mortgage is included in this total debt too, the lender could approve the mortgage for up to $2,250. And with that $2,250, according to that lender at least, you can afford the house between $340,000 and $345,000. And of course, some people have the student loans, so you have to take that to account too. But now let's say you don't have any other debt. So that would mean the lender would approve you for the full amount. And with that $3,151 monthly, technically at least you could be approved for almost $500,000 loan. Now, should you apply for the loan that is more than 5 times your annual income? Probably not, but that's not gonna stop that lender from approving you for that loan. Also keep in mind, banks are here to make the money, so they can approve that loan for you. However, that doesn't automatically mean you can afford that home mortgage if you don't want to struggle financially. Now, if you're still debating if you actually want to buy a house or keep renting, click this video next. There is very important info in it too. And as always, thank you for watching.